The Bearded News Network presents This Week in Real Estate, broadcasting live on TWIRE, Purveyors of Truth, behind the headlines since 2017. Our worldwide transmission will follow the National Association of Realtors as they head to Washington to tackle the terrible housing inventory crisis facing many hardworking Americans today. Also, we'll have the inside scoop on why home prices are dropping like the Great Recession. And the Federal Reserve passes the buck as mortgage rates creep up towards 7%. Investors shove all their clams into new construction, saving builders bacon. And holy mackerel, are consumers finally eager beavers because of the cockeyed price drops? Confidence is up. Now, we'll take you in studio where your host Ray and Dan are reporting This Week in Real Estate.
Yay! Welcome, everyone. Thanks for joining us today. We hope you like our new intro as Justin pops right into Clubhouse as soon as it's over. So the whole theme this week is like Mr. Smith Goes to Washington. So I figured we could have an intro that like is a call back to the good old days of broadcast journalism where it was very patriotic sounding and feeling. So we worked really hard on that one. So I hope you guys enjoyed it. Thank you for joining us for the show. I'm Ray. Say hi, Dan.
Hi, Dan.
And that is Dan. And both of us are Bearded Men of Real Estate, which make us the perfect host for this old show called Bearded Men of Real Estate, which is a little bit different these days. We call it This Week in Real Estate because, believe it or not, no one knew what in the world we did with Bearded Men of Real Estate. So that's why we changed the name. So
it's so weird. What's your show called? Oh, it's called The Bearded Men of Real Estate. Oh, what's it about?
Like seriously, people would be like, "Is this about beard grooming?" I was like, no, it's not.
We call it The Bearded Men of Real Estate, but we talk mostly about grooming and then shoes.
It's not. That's not it.
Yeah.
So we do have a bunch of news stories. I hope you heard the intro because we're going to start putting all the news stories in the intro. We've done that for a couple of weeks now. We like the process, but we are going to talk a little bit about NAR. We've been talking for a long time about how NAR has how the economy has an issue, not with people who can't buy a home that need more resources in order to purchase. The main issue we've been talking about is on the supply side. So we have an article from Realtor Magazine in which NAR Goes to Washington, that's our call to the Mr. Smith Goes to Washington, which is where the thumbnail came from. But NAR Goes to Washington. And we have, we're going to talk about it because they went up there to talk about the supply side, which is kind of unique. You know, normally all the focus and everything we've heard is on the buyer side.
In 5 years, they've tried to remedy the inventory crisis or shortage of inventory or incentivize sellers a total of 0 times. It's not something they talk about often. It's always about incentivizing the buyer or helping the buyer or helping people achieve that American dream. But part of the American dream is also selling a home and maybe buying another.
Yeah. And I should check real quick. Can everyone in Clubhouse hear us okay? I just want to make sure. Can we get a...
Oh, they usually would tell us. They 100% would tell us.
All right, Ollie, he's flashing his mic. That's old school, man. Now you have GIFs. You can use a GIF.
Yeah, that's like... yeah.
Jack
That's like day one launch.
That's right. Yeah. See, there you go. You use the emoji, the thumb up emoji. So if you are following us in Clubhouse, you can go up to the little, at the top of that, you see a little green house. And that little green house happens to be the largest real estate clubhouse on Clubhouse called Real Estate Networking. And I know for a fact, millions and millions of dollars have been passed through that. So if you're interested in joining some of the conversations there, if you want to start rooms in there, just let us know. We need to rekindle the old broker lounge. It was a real estate agent broker lounge where we would just chill and give people tips. It was pretty rad.
Yeah, but anyway, to just hop into and listen. But yeah.
So feel free to drop by. I'm going to pin the link at the top of that because we are also broadcasting live right now on Clubhouse. I mean, not on Club. Well, we are on Clubhouse, but I meant to say I'm posting on Clubhouse. So we're broadcasting live right now on YouTube. It's just too much.
Yeah, it's a lot.
So we're broadcasting live. We want to get as many YouTube viewers as possible because we think that's kind of where we're probably going to remain most often in the future. And we're going to have some other stuff coming out on the channel too. So if you're not subscribed to the YouTube channel, you definitely want to do that. And D says, wait, the name changed. I was wondering why my alerts were coming in. Now that shouldn't have affected your alerts. If you're on Facebook, which she is, and you're a follower of the channel, you can turn on alerts, but a couple of years ago, they changed it to where if you were just following the channel, you would no longer receive the alerts unless you hit a button. So make sure you're hitting the alert me button there and on YouTube so that you can be alerted to the live show. We do this show live. We could just record all this and talk about articles.
We could.
And put it out there and let people comment on it. But instead, we want to take your comments live. We want you to join the conversation live. And today, Howard Harold Broadsley was first, and he was there on Facebook. So thanks for joining us, Howard. Teresa Pastor is here. What's up? Sarah, she's on my team. Hi, Sarah. Thanks for watching the show.
Hey, Ray, this is me as all. I'm
Hey.
trying to get you on YouTube.
Yeah,
Right?
click the link at the very top of the chat in Clubhouse that you're in there.
In Clubhouse?
Yeah.
Oh, okay, the chat. All
Yeah.
right.
Yeah, just
It
where you
says
see
NAR fixes.
everyone's thumbnails.
Yeah. NAR goes to Washington to fix the housing crisis is the title there, but it's got a little thumbnail of us going to Washington.
And
You
then
remember that movie, Mia? Mr. Smith Goes to Washington? Instant classic.
Yes, I'm that old. Thanks, Ray.
I remember. I watched it in school. What do you mean you're that old? I like that movie. That was a great movie.
Yeah,
why does he keep yelling at me?
I'm not.
Melissa Mara says bearded men in suits. Yes, we were in suits in the thumbnail. So, well, thanks guys for joining us. Those are all the places you could join us. We'll display your comment and we could talk about you, or sometimes we could talk about your comment. So thanks everyone for joining us. Dan, before we get into all these news articles, would you tell people kind of why we do this show and what it's all about?
You know, I would love to. Now, when Ray and I met here it was on Facebook, trolling a large group of real estate agents, and unbeknownst to them, but very knownst, that's a word now.
Very known.
Very, very beknownst to Ray and I, we would usually end up in the same kind of sub comment or sub thread, kind of going, but I had an idea at that time. I had an idea for a show called The Bearded Man of Real Estate, because I am in fact a bearded man of real estate. And when I met Ray, I noticed something very interesting about him.
Really, Dan?
Mm-hmm. He's never seen a Zoolander movie. Not one of them.
Another one.
I actually watch them all. I love them. It's some of my favorites. It's some of my favorite movies.
Do you know why? That's Conoco's profile.
Justin Conoco. He's got what's the guy's name? Man.
Mugatu.
Mugatu. Yeah, he's got Mugatu as his picture.
So and I like to throw a little tidbit out there. Every week you get to learn a little something about Ray, and now you
Blue
know that
Steel is my look, man.
Yeah, see,
just look behind me.
Now you know Blue Steel is his look. But I obviously noticed that he's a beautifully bearded man, and I also noticed that he loves giving value up front to not only his clients but just to humans in general. So the show is about being more as an agent, but also being more as a human.
That's right. And one of the ways we believe in being more is to watch the show.
If you watch the show, that's it.
If you watch the show, you'll be more. But the reason why is because we're gonna dive a little bit deeper into the headlines. We're gonna give you some information that, the headlines might be scary, but we're gonna dive a little bit deeper. We'll have a discussion about it. We'll bring in some experts at times and talk about it. And we really just wanted one place where you could go and kind of have a better understanding of what's happening, so that then you could tell your clients, hey, this is what's actually going on. Here's the headline that you're going to see, but this is what's actually happening.
And we could do that.
Yeah. And if you have that information, then you'll be able to better advise your clients and also make better decisions about your business. And we hope that you'll also pick up a couple of good content ideas out of the show. So thanks for joining us. Were you able to hear that?
No, huh?
Hang on, just heard something funky. I just want to make sure let me see if it's correct.
I think Howard just says yes. I don't know what he heard though.
Howard, you heard that? I can't tell what you guys can hear on the computers and what you can't.
Yeah. Yeah, you probably hear it more because you have I'm listening to just speakers.
I do. I have the headphones on, but I also am trying to make sure before we go to the news articles and stuff, because a lot of times we'll go to these news articles and they have background sounds.
Yeah.
Dee heard it. See, I think the only way I can get you to hear it, Dan, is if I press the button. So I'll save
Dude,
that one.
you ever have that thing when you have 87 windows open, like I always do, and then one's playing music, and you're like, "Where's that?
Oh no,
I can't find the window."
that's the worst.
Jeez, Ray, get Dan some headphones.
Well, so it's
They're
not
in.
that he doesn't have the headphones. It's that the inputs and everything are different. So I can hear some things that he can't, and I can hear some things that no one else on the broadcast can, and that helps me to like queue up a video. Sometimes we'll have videos, so I'm going to queue it up without anyone hearing that I'm queuing it up. Well, but now I'm thinking like, well, maybe everyone could hear me queue it up, and they were just annoyed.
Or they didn't
say anything.
Yeah.
They're like, Ray is queuing up something while Dan is talking. But no, this is what I was playing.
They're breakdance fighting.
Hey, Matt.
What's up, Matt?
I'm gonna go ahead and get some headphones when you get a short game. Boom.
Boom.
Oh, roasted.
Boom, roasted.
That's golf humor for you guys. I know that's why you guys show up, for the witty banter and the golf humor.
That's why we're here.
Why we're here. Yeah, the Bearded Man of Real Estate talking about golf. It's a golf show. We just call it. It's all deception. It's all
Par for the course, really.
sleight of hand. Par for the course.
Boom. Roasted.
All right. All right, Dad, you ready?
Yeah, absolutely.
Let's go. Oops. Well, there may be a delay today.
No, it's good. I like to keep them off. I like to have their it shouldn't be perfect. It should not be.
You know what else isn't perfect, Dan?
Me.
Politics.
You said a lot there, buddy.
NAR goes to Washington. So this is interesting on several fronts. And one of the fronts is because NAR is embroiled in several lawsuits around the country. And maybe this is also trying to bring some goodwill, as in saying, hey, let us help you actually get this housing thing on the right track. If they could prove that NAR does something other than protect real estate agents' commissions, then maybe they'll have an upper hand in the court case. Maybe they'll be able to get the DOJ off their back. There's a lot of things that go into the politicking, but something I hope is that there's a genuine desire to fix the supply issue.
But
I feel
it's
naive
late
just
in the
saying
game. Yeah, right. Let's get into it. But I have obviously strong opinions to this. But yeah, go into it. Let's.
Yeah.
I would love to hear everyone, Clubhouse, YouTube, everything on this one.
So this is a brainstorm session that I wish I was invited to, but I'm just not the politicker. But NAR helps White House brainstorm inventory solutions. This is on the Realtor magazine website.
Brainstorm.
Raising the alarm about the nation's housing supply crisis, Leslie Rhonda Smith, president of the National Association of Realtors, told policymakers at a White House meeting on Wednesday that the U.S. is short 5.5 million homes that need.
What?
Hmm?
Wait,
We're short 5.5 million homes.
Wait, Ray. I
What?
see videos and articles on everything about an overage of inventory. Now everything's going to crash because prices are dropping. How are we 5.5 million homes short?
It could be, this is just speculative, but
Okay.
it could be that the YouTubers are just trying to scare people. Housing supply is the number one issue for millions of consumers who are locked out of the market, Rhoda Smith
5.5
said
million.
following a meeting in which included the housing leaders, who also stressed possible solutions to overcome the shortage. Quote, I conveyed to the administration and my colleagues our support for a comprehensive plan that includes investment in new construction, zoning reforms, expansion of financing, and tax incentives to spur investment in housing and convert unused commercial space to residential. That's interesting. The White House meeting also included National Economic Council Director Brian Deese, D-E-E-S-E, Deese?
Deezy.
Deese? How do you say it, Dan?
His full name is Deezy Nuts.
That's not it.
Oh, it's not. It's just Deezy. I would say Deezy.
Oh.
Boom. Roasted.
Boom.
Actually, I think this would be this is going to be far more appropriate for that because everyone that knows where the meme came from.
Got it.
There it is.
It's so fast today with the sound effects. I just want you to know, we've played 4 sound effects, none of which have been on my board today. I've downloaded it while we've talked, uploaded it to the board, and played it. We're just broadcasters. Impressive. Okay.
Live production.
So he's the Domestic Policy Council Director. Oh, and the Domestic Policy Council Director, Ambassador Susan Rice, Housing and Urban Development Secretary, Housing Finance Agency Director, and leaders from other housing industry organizations. Mortgage Bankers Association, National Association of Homebuilders, National Multi-Housing Council, and Fair Housing Alliance. So during the meeting, officials highlighted legislative and administrative private sector and state and local actions that needed to address the supply and affordability. Quote, discussions like this are critical to raising awareness about affordability, Rhoda Smith said. Middle income, first time, and first generation homebuyers feel the most impact of the supply shortage as they face greater obstacles in the current economic climate.
In my opinion, Ray, the best way to keep to fix affordability is to keep gas prices as high as possible. $6.50 here in California. That's the way to help affordability.
You'll be happy to know that OPEC is definitely doing that for you, as they announced today that they would cut production of oil by 2 million barrels, and the U.S. has cut our own production of oil by 2 million barrels since in the last 2 years. So, way to go, guys!
Cool. Yeah, good job.
Yep.
Thank you for that. Thank you.
It's just a little aside. It's a little. We know you didn't come here for that. A little extra.
My sarcasm,
right? You know what else has a major? Well, oh man, sorry guys, I've been looking at a different screen. I did not get. Pete Thornton said, "Raise rates to high levels, keep inflation high, and nobody will move anywhere. Turn a few malls into government housing, and boom, problem solved."
Well, let me ask that question then.
I'm hoping they have a different solution for the commercial real estate. Okay, so if they did turn the government housing into, or if they did turn like malls and commercial buildings that had emptied out into government housing, that's not a good solution.
It's not a
but
great.
If they created like really cool swanky places and priced them affordably, that would be really cool.
The affordable thing is the biggest key.
Affordability.
Obviously. My question though is, do they need to? Obviously, we're way behind on new construction, so creating new housing and new options for people is a part of it. But isn't another part of it incentivizing sellers? Resale sellers, obviously, then on the other side, if they have to go buy somewhere else, but wouldn't it help? Excuse me, my iced tea is coming back on me. Wouldn't that help them? Sorry, my iced tea, quote unquote. Wouldn't it help to incentivize sellers and help, get more inventory loosened up that way? Maybe I'm wrong.
I think if there's anything they could do to incentivize sellers, that would be great. But the problem is, like, one of the ways to incentivize sellers is to incentivize purchasing on a higher end. But then that's going to look like you're just helping rich people.
The step up. But I mean, it can be at different levels.
People empty out of their first.
You can be at every level, though. If you're selling in the lower third, 300 and under, and so on, it doesn't have to be just one move.
You have to wait till after the election to get that kind of stuff through, because that's bad optics.
Yeah.
Ray and Dan.
What's up, man? How are you, Howard?
Dan.
Howard coming to us live from Israel.
Doing great.
Thanks for making the broadcast worldwide, sir.
I make it the international international real estate market.
That's right.
You guys, one of your comments was approvals, the whole process involved, and could you guys see maybe new cities being created as a way of solving a housing crisis? Let's see, this big tract of land between two communities in a county, and all of a sudden, let's put in 1,000, 2,000, 3,000, 4,000 homes and create a new municipality.
It's not a bad idea, except what creates the municipality is usually the opportunity, unless it's a bedroom community. A good example of this, I think, is Northwest Arkansas. There's 3 different cities, Fayetteville, going from south to north. Fayetteville, Springdale, Rogers, and Bentonville are kind of diagonal. But in 2016, all of them were booming. Or 2006, all of them were booming. The crash happened. We saw a couple of municipalities starting on the outskirts, But when the crash happened, it's like everybody started to come inland, and they really started to develop the areas between those cities before expanding out. So I think you would see some cities start to expand maybe in those type of situations. But if you're saying like a city is born and it's born because it's easier to build there, they make it as easy as possible and also incentivize it. Maybe what I think would happen is a city that's close to that would scoop it up and say, okay, what we're going to do is if they build in this area, we're going to annex this area where it's just forest. And if they build in this area, we're going to incentivize that. For years, they've had the rural development loan as part of that, where you could get 100% financing if you buy in rural areas to help develop those areas. But also that incentive works because it encourages people to build and develop in the rural areas. The only issue with it is that the pricing isn't very high. You're looking at lower 1/3 of the market for a rural development loan in our area. So if they maybe increased the availability for the rural development loan up to 500,000, 600,000, 700,000,
right,
then you'll see some builders building in the rural areas that are actually building some quality homes instead of just
and still make a pretty hefty
dollar
profit.
store. Right. That's not a bad idea. I mean, that's an interesting thought process, Howard.
Remember, Israel's the size of New Jersey, let's say, or the greater population of Israel is like greater Los Angeles. There was a couple of cities that have been created because, there's land locks. There's not enough profit to increase new housing. And they've created new cities just to create new housing solutions. And as far as the housing shortage, I think it's global. At least I can tell from Israel, we're talking about a major, serious housing crisis, lack of housing. And I just read another call today of, the way the population is going to grow up until the year 2040, they're still not going to meet the needs. I don't know if people will be living with their parents until they're 50. I don't know, but there's a major housing shortage.
Wow. So if someone wanted to purchase a home in your area, I guess the pricing, the affordability is just totally out of whack, right?
It's out of whack entirely because talking about supply and demand. The supply is limited and the demand is high. But saying that, there's also some sort of capping capability of the buyer. The banks will only allow so much of a mortgage to prevent a crisis of 2006, 2008. And what we're seeing is that the buyers are just, we're also having an increase of interest rates. When it rains in the States, it trickles down to everybody else. So our interest rates are going up, and which is causing the buyer to go, wait, let's see if I can afford that. And in talking to one of my sellers yesterday, the day before, she's going, in her opinion, and she's right, we're going to see a lot of people starting to sell their homes because when they take a mortgage that was linked to certain interest rates and all of a sudden they can't afford to return their mortgage, we're going to see maybe more homes coming back on the market. What might be a flooding of the secondhand homes, which might cause a reduction in prices. But yeah, it's a challenge. It's like there's no rules at the moment because there's not enough supply, the high demand, and the prices have reached their cap. People can't afford it to go any higher than it already is.
Wow. Interesting. Well, thanks for the market update. That is something to be leery of. But I think one of the, positives about the U.S. is you have so many different markets around the country that whenever that's squeezed so hard in one market, people are just going to move to another market, which will kind of settle the one that everyone's squeezed in. But that's really interesting. I think you'll definitely see some pockets in that same position, Howard. Matt's joining us everywhere.
He's a Cliff.
He's on Clubhouse. He's on LinkedIn. Hey, Matt, LinkedIn.
YouTube and Facebook. He's a Cliff.
Yeah, a Cliff, CLYF. He's got the Cliff Award again for this week. Matt says that a lot of commercial is turning to multifamily in Atlanta right now. Interesting. He also says they're still super short on it there.
And there's a comment on Clubhouse from Jerry Parsons. Thank you for that. All first-time buyers should have access to a home loan. Application should be similar to an apartment application. If you can afford to rent, then you can afford to own. First-time buyers only. Now, in theory, like if it was payment based only, right? You can afford to pay $2,000 a month in rent. You can afford to pay that on your loan, but there's also the risk in there because you have to pay something back. With rent, there's nothing you're paying back. They just
You
kick
also
you
have
out
to
and take your
maintain the
deposit.
property.
They have to maintain the property. They have to keep the values up, or that affects your neighbors. And then also there's a risk for that lender.
I think, I think it's
So,
reasonable to consider
theory.
people's rent as a part of the equation for getting a loan, but I don't think everyone should have access to a home loan. I think that's how we got into the downfall of 2008.
Yeah, 2008. 2000 odd.
2008, you're right.
2008.
I think it's I like, it feels good to say everyone should have access, but in reality, like, only those who are responsible enough to pay the bill should have access. And I think paying your rent doesn't prove that you can pay a home loan, because it also doesn't prove that you can change out your AC and put on a roof, change out the water heater when it starts to leak all over the place. Those are just things that you have to be able to absorb as a homeowner. So I don't know. I hear what he's saying. I would love for that to be true, but I don't think it is.
Absolutely. I think it's just a little, and I know we have to move on here, but my final point on it anyway is this is just way too late. The inventory crisis it was exacerbated by the Rona, right? But we've been short on inventory for quite a long time, and we should have been incentivizing sellers forever. It could have come out of the crash in 2007, 2008. But now it's just too late, and it's a brainstorming session. It's not like we've laid out an 11-step plan to help incentivize sellers. We're here to brainstorm with you. Okay,
they don't even have the good ideas. They all came together and said the quote that they wanted to say,
and then said 5.5 million short to get the scare tactic out there. Where's the solution?
What's the real solution they discovered?
We're not going to have anything on this. I don't believe
now we know
a couple years.
Now we know what's on the brains of Congress and the housing authorities, but what's on the brains of consumers? Jobs, home prices, and market volatility are among the client's big concerns right now, advisors say. This is from CNBC. With high inflation, rising interest rates, fueling speculation of the recession on the horizon, it may come as no surprise that financial advisors are hearing these concerns for their clients. This is an article talking about what financial advisors are hearing. Douglas Bonaparte, president of Bonafide Wealth in New York.
Great grandpa was Napoleon. Interesting.
Bonaparte. Yeah. He says that at this point, it's speculation. It's hard to point to data that says we need to be concerned right now. So all this that's on everyone's mind and what's going to happen, the financial advisor said, it's all speculation. Yeah. Memories of the Great Recession linger. It talks about how people are thinking a lot about the Great Recession and what's actually what caused that. And they're worried about it happening again. If you work for a venture-backed capital company and the last round of capital you raised was 6 months ago, you're going to be in a more difficult fundraising environment if you want to take that risk. So I thought this was interesting in relation to a new article that was just published today that said high mortgage rates, tight supply, and economic uncertainty. Here's what's happening with home prices.
Speculation.
So a lot of people are looking at the jobs. And I think we talked about this a little bit last week, but whenever the Fed raises interest rates, jobs will go down because that's what happens. The Fed is tightening the money that's available out there for businesses to expand. And so now that if they're not going to expand, if they're not going to continue to grow at the same rate, then the number of jobs that are going to be available is going to be less. And so you should see fewer jobs. You should see the jobs number, quote unquote, get worse as he raises rates to prevent inflation. That's what happens. But the high mortgage rates and tight supply and economic uncertainty is really what is hitting home prices, according to CNBC. They're starting to soften in most markets around the nation, yet home prices are still higher compared with a year ago. And it's likely they will fall steeply. The sharp rise in mortgage rates over the past several months has made housing expensive, while it has some buyers pulling back and some sellers lowering what they're asking for. Strong demand and tight supplies are supporting prices. And that is something interesting that we're seeing. I mean, I did a comparative market analysis on a property yesterday for an investor and found that the property was listed okay. And for the market, it was okay. But per foot, it was like way out of whack. And so as I started to dig in a little more, I figured out they're trying to use the cute factor because it was one of the cuter homes in the neighborhood to get a higher price point. And they did get another offer as our investor was also looking at it. But the property had been sitting for like 30 days. So it's really interesting that it had been sitting a long time, quote unquote, a long time. Back, I remember bragging about 30-day closes and stuff. And I think you said last week, like an 88.
I used to do, this was 2012 and 13. I had marketing that says, we will close on your home in 88 days or less as a guarantee. And because everyone else was at 102 days or something like that. And we were 2 weeks faster.
Yeah. Let's see. Black Knight, a real estate software and data analytics firm, reported the second straight month of declines in August. Prices went down 0.98% from July. That's not quite 1%. It reported upwardly advised 1.05% monthly decline in July. Put together, these mark the largest monthly declines in more than 13 years. 1% decline in home prices. I still don't know if they're reporting what homes closed at, or if they're reporting what the price drops around the country that are happening but it is going to take a while to normalize.
It's going to take, I mean, within, we're going to hit it in a second if you want to move on to that, but with interest rates where they're at and where they're going.
Yeah. Let's do that. Let's talk. Go ahead. Who's up?
This is Ali.
Hey, what's up?
I just find it interesting because when you listen to like CNBC or something like that, first of all, I love how the media treats the real estate market as a monolith in the U.S. as if everyone's going through the exact same thing.
Yeah.
And it's funny because it's kind of a self-fulfilling prophecy when they're sitting there going, housing prices are going to crash. And then you're wondering why people are a little bit more hesitant to actually pull the trigger and purchase a home because they're waiting for something that the news keeps pushing. And for the National Association of Realtors to sit there and say, oh, we're going to brainstorm the problem, they can't do anything because there's so many different moving parts that have contributed to where we are today, that basically the Fed only has the interest rate to work with. National Association of Realtors can sit around and say a bunch of stuff, but there's nothing they can do as a cohesive unit to be able to have any meaningful impact on the availability of houses or anything like that. So I don't understand what the actual purpose of this brainstorming was if there's nothing that can actually be agreed upon and executed. So that's just my.
Well, I mean, Ray made the point that at least they know about it now. It's not a surprise to anyone. It's not a topic that's not spoken about, but at least we've gone to them and said, hey, we're 5.5 million short. What are y'all going to do about it? And we're not just here to defend commissions. We're here to help the consumer too.
I think there's power in incentive. There's certain things I do because I have tax incentive to do them. There's certain, I might make a decision to go here rather than there because I have a tax incentive to go to this other place. So I think there are things that politically can happen. And the NAR is one of the largest lobbying bodies in the country. So I think with the right pressure, we could put pressure somewhere to get some changes made. But did you guys hear on the NAR Goes to Washington part, the groups of people that they said would have to be involved to make those changes? I can't pull it up real quickly. I ripped through it real fast. Let me see if I can find that part.
I mean, it was a lot.
Hold with me. Okay. I conveyed to the administration my colleagues' support for a comprehensive plan that includes investment in new construction, zoning reforms, expansion of financing, I'm assuming on the supply side, and tax incentives to spur investment in housing and convert unused commercial space into residential.
that's local, federal,
Right.
everything, state. That's all levels of government. It's a big deal.
So basically, they're saying if we can get all these people who generally don't work well together to work together,
Right.
we'll have some miracle where we'll have inventory.
the NAR and the NAHB works pretty well together. The builders and the realtors.
And then NAR gets to go. We tried.
It's the reds and the blues that I think everyone kind of has an issue with. I'm still looking for. Hold with it for just a second, because there's a section in here that talks about. Okay, here it is. During the meeting, housing officials highlighted legislative, administrative, and private sector and state and local actions. That's pretty much everything.
Just the whole, it's government.
Yeah.
The government is going to have to do its job, but
yeah,
it's not possible.
So I'm in Los Angeles, and Los Angeles has taken action in rezoning to some extent. They've reduced parking restrictions for cities to allow for a higher density development. There's been a lot of ADUs being built and things like that. But at the same time, if interest rates are going to keep increasing, it's still going to push a large number of people out of the market just because of affordability, even if the units exist. So that's why I was saying, even if the local municipality starts taking steps, there's a lot of other government and local level people that need to be involved for it to actually deliver the results that we're hoping for. So even though LA's been pretty active over the last year or two in making some changes in zoning and allowing higher density buildings being built, we're still going to be struggling with interest rates and things like that at the rate we're going. Now, this may help 6 months down the line, but immediate, I don't see any benefits.
Lucky for you, everyone's leaving California, though.
Well,
Yeah, all 39 million people supposedly already left.
Isn't that right?
Yeah.
Isn't that right?
It's
Mass exodus from California. That's everything I see, man.
I'm waiting on it. I hope it happens.
Those are all valid points. Among the points, vote.
Interest rates.
But those are all. Speaking of interest rates, and thanks, Ali, for the insight there. But I agree with you. All valid points. Is going to be very difficult. But one of the most difficult things people are facing now is 7%. Mortgage rates inch closer to 7%. Everyone's lucky number, right? Home buyers who waited to buy a home this month compared to last month may have some regrets. Home buying is now 12% more expensive than just a month ago.
If only you had someone telling you, like myself and Ray, that when someone comes to you and says, is now the right time to buy, now you don't push anyone in that direction or push anyone away from that direction, but you say, look, interest rates are rising. Home prices are slowing on their way up. There's a deceleration in home prices, but they're still going up. So if rates get to 7% and there's another 5% increase month over month, if only that was a conversation you were having with your buyers. And now they're looking back going, geez, I'm happy I bought 2 months ago.
What are they saying, Dan?
If only I had bought 2 months ago.
So the higher rates are prompting the housing market to drastically slow. Pending home sales fell 24% last month compared to last year. Existing home sales were down 20% annually in August. Freddie Mac reports that 30-year fixed rate mortgage averaged 6.7% this week. It's up 3% from a year ago. But listen to this. Home buying is now 12% more expensive than just a month ago. That's wild.
That's the wildest stat that we covered.
Yeah. $250 more on 2 payments over the last month. I think, this is something that everybody needs to get out. Like do this in a reel on a green screen, show this article. It's on Realtor Magazine. So y'all can just go to magazine.realtor and find the mortgage rates inch closer to 7% and tell everybody, like, get off the fence. Like it doesn't look like it's going to go down, but we could be wrong. It may hit my what was my estimation? 3.7% or something like that this year.
I think I was at 4.1 or 4.05, something like that.
Bruh.
I mean, you may be the closest without going over. No one's.
I think there was one person higher than me. I forget. There was someone else higher, but and by the way, Ray's suggestion for content, you don't need a green screen anymore. TikTok does it. Doesn't Reels do it?
Oh, that's what I mean.
It'll just
it's got the green screen effect. Yeah, it's got Yeah, maybe I was. Yeah, good.
Set
Thank you
like-
for clarifying.
Because I'll overthink it, be like, I don't have a green. Just put the image behind you, point to it, and scroll up and down. It'll
Use the
and
green
you
screen.
got to get this
effect.
out of there. You got to get this info out there, and you got to get value out to your clients.
And the other article, it's kind of on the same topic. It's also by magazine.realtor. NAR decade high rates cut deeply into contract signings. House hunters are backing away from the housing market, and mortgage rates continue to rise sharply. The National Association of Realtors released, and that was where it says July is down 24.2% compared to a year ago.
Marry the house, date the rate. That's Pete Thorpe's
What?
comment.
He
says, marry the house, date the rate.
It's that Pete. Yeah. But he said lowercase m, uppercase a, lowercase r.
Yeah. He said it in
marry
in
house, date the rate.
in Pepe the Frog. In troll. Form.
He said it in troll form.
Yeah, he spoke in troll.
What's ahead for housing? NAR predicts that the higher mortgage rates will cause existing home sales to drop by 15.2% in 2022, reaching 5.19 million units. New home sales are projected to drop by 20.9%. Limited housing inventory and nearly non-existent distressed property sales continue to support home prices. Actually, I found a foreclosure in my market yesterday and posted on Facebook. And then I emailed it to my entire database, 18,000 people.
Right.
I was like, hey,
you found one in the last how many years?
Well, I know. That's why I emailed it around, because it was like, that's so unique. And also it was in my neighborhood. I want somebody to buy it and make it beautiful. But
yeah,
I had someone else saying, sounds to me like you're trying to get a bidding war. I'm like, well, I mean, no, it's overpriced as it is. Here's where you should go under. So I just informed him, like, here, you should put in this price for it. Anyway, but let's see. Lawrence Yoon, the economist for NAR, does foresee a slower price appreciation ahead for 2023. Next year, annual median home price is expected to rise by 1.2%.
So home price
1.2%. Home price gains slow.
Is he saying year over year on
that? Yeah. He does say that home sales will pick up in the second half of 2023, but down 7.1% overall.
See, I like it. He predicts actual numbers, whether he's right or wrong or not, but he's giving you actual numbers, something to kind of help your clients, forecast, right? Like, here's where it's going to be. But what are you guys hearing? What's the main thing you're hearing? You're hearing up, even if it's 7% or 1.2%, it's up.
It's going to be more expensive next year than it is this year.
It's going to be more expensive tomorrow. If your clients are on the fence about purchasing, you should really have that conversation about them and show them that the house you like a month ago is now worth this much.
There's a nice graphic, and I want to get to some of your comments in just a second. There's a nice graphic I'm showing the viewers. It says housing snapshot, pending home sales, August 2020 index 88.4, month over month is a 2% drop. And then it talks about, the West and Northwest, East, South, all that stuff. So interesting. All right. Let's see. We go to the comments. I saw Jack. I saw you unmute. What's up, man?
Yes. So thanks for calling me up, guys. And happy Wednesday, happy bearded Wednesday plus. So to me, and I've been talking to a lot of people in the financial world, it seems to me like the government is overreacting and not really giving these interest rate hikes time to sink in and see if they're going to have any impact on the economy. And a lot of people that I'm talking to are saying that, they're overreacting so much that on the other end of this, rates are probably going to be coming down at the beginning of the year. And I'll tell you, we talk about predictions all the time. The rate predictions at the end of the year is what I'm looking forward to most. So that we can get it all recorded and figure out who's right at the end of the year.
Well, are you saying that you're going to be close to right? Is that what you're saying, Jack? Did you say 7% this year?
I did. I don't recall, but I'm sure I'll be reminded.
Yeah, we will. For those of you that don't know what he's talking about, in December, we have the year end of the show. We'll have the last show of the 2022 year. And in that show, we will go back and look at what we predicted at the beginning of the year and see how right we were.
How astronomically incorrect we were. Now, it's not just rates. We predict other things. We usually do, rates, how the market's going to be. And then we all make one crazy prediction. It doesn't have to be real estate related, because this week in real estate, in the Bearded Man of Real Estate, talk about real estate. So it can be anything. And Pete Thorpe, who has a comment there, which I will go through in 1 second, but he's had one of the best predictions ever. But he said on Facebook, thank you, Pete. He said, just did an eval for a friend today, told him that on the 400K house, a 20% conventional loan was going to need a around 95K to close, and have a $2,600 a month payment at 6.5. At 7, they're going to be up to 2,750. That's 1,200. Or how much is that? That's 170. How much? I can't do math, Ray. $150 a month more. Jeez. And FHA at 3.5% down. They were around 3,300 at 6.5 for the same house, and that's why there's not a lot of traffic. So it kind of explains, what's happening at your open houses and all that stuff. But I mean, just that little difference alone, which can happen. It's so volatile now. You got to get this info out there.
Well, and the ironic part about all this is it appears consumer confidence is going up.
I swore this was a mistake when I saw it in the articles. I had to look at it. I'm all, Ray is posting something from 2019. No way.
I actually did check the date on this one when I looked at it. I was like, wait, what? So it is from September 27th. This is
now
Fan Yu Ko. He's the NAHB guy. He says consumer confidence increased for a second straight month to the highest level since April, as solid job gains, declining gas prices, and easing inflation contributed to more optimistic views of the economy.
Yeah.
However, spending plans were mixed. The purchasing intention to buy cars and major appliances increased, while the intention to buy homes fell due to the rising mortgage rates. Looking forward, consumer spending will continue to face headwinds from inflation and interest rate hikes. The Consumer Confidence Index increased 4.4 points from 103.6 to 108 in September, the highest level since April of 2022.
Wow.
So, can I jump in here?
Yeah, go ahead. What's up, Aaron?
It's like saying, how are you doing, guys?
Good, man.
Good.
It's like saying, hey, I fell down and I broke my leg and it takes me 20 minutes to walk a mile. Now I can do it in 18 minutes. That's a 20% improvement. They're going from April's numbers when everything crashed and everybody was like, the world is going to end. So any improvement, they're like, oh, we're having an improvement. But the reality is the consumer confidence is not high. It's the highest since April, which doesn't say a whole lot.
Well, that's a good point. It is. It is only a moderate increase.
It is a moderate increase, and with all the negative headlines out there, it's fun to see a positive thing every now and then.
I know you don't get the benefit of seeing the. I'm gonna try to share my screen here. I know you don't get the benefit of seeing the chart on Clubhouse, but we are looking at a chart, and it's really kind of all over the place. Oh, there it is. Now I can zoom in. So where are the dates on this thing? How far back do we go? Is that from 1978? Really?
I think so, yeah.
In 2022, let's zoom in.
I remember 1978.
Yeah. So you could see where it does go to a pretty deep low. But it's not a historical low. 08, 09, 10. Those were the lowest points on the graph, of course. Before that, it was
82, 83.
82, 83.
When
they
interest
were
rates
down there in the 20s on the index.
The 13, 14%.
Yeah, interest rates were super high at that time. So we at least, but you could see in this graph, and the reason why I want to show this graph is to bring up Aaron's point. You can see in this graph where you have major ups and major downs, right?
Major. It's extreme highs and lows.
Extreme highs and lows. The red line is your consumer confidence index at the present. Expectations is the green line. So you can see the blue line is the index. So I guess you have a present situation, which is a little bit different. This blue line and the green line have all gone up. The red line is way up, but that has always kind of preceded a huge dip. So it's all an ebb and flow. But Aaron's right. I mean, yes, it's higher, as we can see. Can y'all see my cursor going up there on the very end of this thing? Yes, it's higher, but I wonder if it will hit this top. And now that OPEC is going to cut 2 million barrels of oil and that we're not doing domestic oil production, gas prices are going to go up. That's a major factor in this. And if that happens, you could see this go straight back down.
Yeah, real quick.
And I, oh, go ahead. Go ahead.
No, go ahead, Aaron.
Go ahead.
I believe that history doesn't repeat itself, but there are trends. And I think we are, truthfully, as close to the 80s as we are in the real estate market. A lot of the similarities that were experienced in the early 80s are what we're experiencing right now. There is no housing oversupply. The Fed is raising rates. They've got to slow the economy down. The consumer sentiment is going to take a dive because the Fed's not going to stop raising rates. They're just not going to, and they're going to do it until they get a hard stop, so they don't have a decade of the 80s, which is what we had of just a dead decade for the most part when it came to everything. It just was very, very flat, and they call it a lost decade. They're trying to prevent that from happening by being really aggressive, getting these rates up where the economy just stops so that they can stop inflation and start making the changes to be able, sorry, I'm walking, guys, making the changes to be able to lower these interest rates. I think we're going to go into a stop and start market. It's going to be really quiet, and then we're going to get a drop in interest rates for a minute. There's going to be a ton of activity. It's going to go back up, and we're going to be hanging around again. I think that we're just in a stop and go. We're going to be in a stop and go market for the next couple of years.
Yeah, I would agree with that. As a matter of fact, there's another chart. Aaron, it's like did you read the article?
I did not.
There's another chart.
I just have been doing
this is just what yeah. So there's another chart that shows the respondents who are planning to buy a home. And these are the people that on the survey said that they were planning to buy a home. What's interesting is that it's kind of like since 1978, it kind of hovers on this graph between 2 and 6. It just kind of goes up and down gradually, casually, actually more accurately between 2.5 and 5. And it just kind of snakes up and down kind of slowly. And then in 2011, it seems to chart way up. It shoots way up. And the number of respondents who are planning to buy a home go really high. Now, this is not people who own a home. This is not people who don't own a home. These are just general respondents. So this includes some people who currently own a home that we're going to sell. What we know from the time in 2011 to 2020-ish is that people were able to sell their home every 2 to 3 years. And it used to not be that way. People would stay for 5 to 10 years. And recently, more people have stayed longer in the last couple of years, especially since the pandy. Yeah. So as you can see now, the graph is starting to go back down. The question is this increase that was hovering between the 4.5 to 7 range, is that increase a new normal and a new standard? Or is the standard what it's been happening since 1978 to 2011, where the number of people that are looking to buy are between 2 and 5, 2.5 and 5? And this, those are the percentage of respondents that are planning to buy within the next 6 months.
Yeah, I would say it's the latter. That seems more of a flat trend than the last 10-ish years where it's, the head of the monster. It literally looks like the Loch Ness monster, by the way.
Yeah, like a dragon or something.
Yeah. And I would say it's going to get back down to the flat range.
And if that happens, that means that the housing boom, that we all say, well, is a 2006 housing boom, right? I mean, look at this. The number of people that are planning to buy
it was
kind of normal.
Yeah.
So although there are more, now this is not the number of transactions, guys. This is the number of people that are planning to make a purchase. But you can see the number of people planning to purchase went way up since 2011. And I think that's probably going to go back down to what it's been doing for 40 years.
I
so
would
it's
agree.
Interesting, Aaron. I think we have been going up and down quite a while. So I like it. Good point.
Well, would home price drops affect that and keep the number high, Ray? What do you think?
That's a great question.
I just like throwing that softball out there for you. And yeah, it's a subtle
Home
hint.
prices are dropping like it's 2009.
Drop it
That
like it's
the
hot.
the
Drop it
song
like
like
it's
party
hot.
like it's 1999 immediately came to mind. Home prices are now posting the
Yeah, I
biggest
went the
monthly
other way.
decline since January of 2009, according to the latest Mortgage Monitor report from Black Knight. Median home price in August fell 0.98%. We already talked about that. July's 1.05% monthly decline. With mortgage rates at 6.7% of September 29th, it takes 38.2% of the median household income to make a monthly mortgage payment.
So, Ray, this means home values are down, right? They're dropping. They're dropping like it's 2009, right? Home values, right?
Well, home prices appear to be.
Right. And doesn't that help?
Home prices are beginning to fall from post-pandy peaks, but remain up 12.1%.
Yeah.
From August 2021, which is record growth.
I mean, remember the first 2 years of the Rona, there was extreme growth. It was 19% and then to 17%. So 12% is a decline, but it's getting back to the normalcy. It's getting back to the regular, 3% a year, 3 to 5% a year. So this has to happen. This isn't a crash. This isn't even a correction. This is a normalizing.
There's a quote in the article that says, right now, prospective buyers are not only trying to come to grips with the falling demand and declining prices and sharply higher interest rates, but they're also having growing disincentive to give up their own historically low rate mortgage in this environment.
Emotional, damn it.
Some may be waiting out the market to see if demand and prices return in the spring. You think demand and prices are going to return in the spring?
It's going to really depend on where rate and inflation are at, in my opinion. But yeah, I would say so. I mean, kind of, put the past behind us a little bit. And, if rates are kind of settle around the 5.5 to 6 range and things, prices keep decelerating, I think it'll normalize. That would be, because remember, in the last 2.5 years, we haven't had a normal, Dusty, she hasn't checked in yet, but Dusty in Arizona, she's kind of seeing a normalization because usually their summers are their cooler time for purchases. And then more people buy when it's actually weather-wise cooler. She's kind of see some normalization, but, we've skipped so many different, it just that whole first year of the Rona, it completely erased what normal seasons do in real estate. So we're just normalizing a little bit.
One of my favorite quotes, or one of my favorite stats in this is while 20% of markets have seen only marginal declines, less than 1% so far, a third have experienced drops of 3% or more.
No. Guys falling.
Yeah. I mean, there's some big markets with bigger drops. Of course, like San Jose.
Right.
Yeah, 13%.
Yeah. We had, who was on with us last week?
Krista Nielsen.
Krista, yeah. She's like, it's not the news I wanted, but hey, thanks for having me on the show. But,
I mean, we talked about it. Like, that's a deal, right? You could get a deal.
That's the positive take from it. I mean, and when things are up so crazy, 40%, it's got to come back down. And, but yeah, there's some bigger drops. We covered that last week.
Yeah. I'll skip the market watch because that's kind of the same thing that we talked about last week.
Yeah.
But you would think those are kind of leading towards discounts, right? Oh, Howard says she might be. Thanks for. She might be a Blueprint in Phoenix. Good point. But you would think that those price drops might lead to discounts. And you know who loves discounts, Dan?
I don't know. Who, Ray?
Investors.
See, that's
in the open.
I did know. I knew.
You knew that because you wrote it.
I knew because I'm reading it.
We said in the open that investors were shoving their clams to.
Yeah, I also helped write the intro, so I knew it was coming.
Do you know what that means? Shoving their clams.
Yeah,
give them all their money,
dude. I was literally.
No, I'm talking to other people. I know you know.
No, I know. I'm just giving them some insight. I was literally looking up old timey terms to make this sound like Mr. Smith goes to Washington.
Smith goes to Washington.
And to give Ray that kind of fuel, like would you send something from 1943 or something broadcast?
Yeah. It was good. I actually went to the Library of Congress to get the music. That way, it's not copywritten.
Literally looking up old timey terms
and band tunes.
Yeah.
All right. So investors are scoring bulk discounts from strapped home builders. Builders are stuck with a stockpile of extra homes during the turning to the boogeyman of residential real estate. What?
What?
Why do they call investors boogeymen?
Because they're trying to take advantage of the market, I guess. I don't know.
I mean, those investors, I don't know. Home builders are often offering discounted bulk sales of homes to investors. Wall Street Journal reported the move comes rising mortgage rates are sidelining traditional buyers in the market, saddling
I have an
buyers,
idea. Okay.
builders with more inventory.
What do they call them, Ray? What kind of the corporate buyers, the big companies,
Institutional investors.
Institutional investors. Those might be the boogeyman, because you already mentioned, Ray. You put that kind of distressed or bank-owned property that's in your neighborhood. You put it out there because you want an investor to come in and fix it up, right? But now an institutional investor, they could be the other side of things.
They could be
that's who they're talking about.
Maybe. I mean, I guess in a lot of those cases, they would assume that institutional investors are the only one with that kind of money, but we're working with $5 million of investors right now that have to put it somewhere. So I'm going to start calling some builders. In August, homes under construction increased 14% year over year, which seemed like a desirable in a market hamstrung throughout the pandemic of lack of inventory, which it seems like we still have lack of inventory, 5.5 million. But sales were hotter a year ago when mortgage rates were significantly lower than the 7% they are now approaching. As the market cools, builders need to find different ways to offload new construction homes. So this is a question that
for days, baby.
we talked about it, 5-6 weeks ago, how it's still a really good market for builders, but they have to build and know that when it's finished, it might sit 30 to 40 days.
Right.
And in some markets, it could sit up to 3 months. And I think what we're seeing is a problem where they don't have the ability to hold it that long.
And also, if they started building, 6-8 months ago, were they building in the right price range? Because if they're building in that upper, I guess that upper tier, not the super luxury has cash in it still, but if they're building in the wrong market and now interest rates are up and buyer traffic is way down, do they have the ability to sit and hold those properties, or are they going to have to offload them to the boogeyman?
Boogeyman. New homes accounted for only 2% of investor purchases in July, according to John Burns Real Estate Consulting, which we covered last week too.
There's that guy. That guy.
he's got a good consulting. He's
got
a good PR firm out there.
That's what it is. It's all the same numbers. It's just his PR firm is pushing out there right now.
Yeah, it's like the cranberry sales guy. He's getting on all the other vegetables. You want an apple? How about some cran apple?
Cran
you want a raspberry? How about cran raspberry? You like grape? How about cran grape?
What about cran pineapple?
That's a Brian Regan shtick. These companies are still eager to be part of single family rental market, however.
Right. Come back to that. Julie Moon, you did not represent a buyer named Mr. Boogeyman. No.
Are you serious?
Like, what's the history on that name? Is that from, like, what part of the world is Boogeyman from?
I mean, tis the season.
That is interesting. We learned a little bit of something about Julie. Plus, she's also a Bulldogs fan. The laugh was perfectly timed. All right, sorry, Ray. I had to interrupt you there, but you can go back to the numbers.
Okay. These companies are still eager to be part of the single family rental market. However, as long as it comes at the right price, sustained demand and short supply of homes sparked a boom, making build to rent homes fastest growing sector in the nation, which we've covered too, the B2 rent, build to rent. All right. So a lot of people are saying that that's going to take up a lot of the homes that are on the market. It's going to get that inventory is going to be gone when that inventory should go to people that want to buy and sell.
Right, but if it just sits and buyers aren't picking it up, doesn't that hurt the market, Ray? If it just sits?
I mean, it would lower the price.
And if an institutional buyer is buying these, or an institutional investor, that's very difficult for me to say.
The argument is it's going to artificially increase. But
is that true though? Are they going to buy it all at market value, or are they going to try to get a pretty steep discount?
They're definitely going to get a deal. Definitely getting the discount, or they can't do it.
Right.
I don't know, valid points all around. This is one of the concerns that Glenda Baker was sharing with us one day, where people were buying neighborhoods and kind of setting the comps for that neighborhood because they owned a lot of the properties in the neighborhood. They would sell one, eventually set new comps, and then when they had that one comp, they would then sell all the other properties at that artificially high price, which would make people buy it for more. I mean, the only question is, does that work? Does that
think
work?
About that strategy, right? I set a bunch of overpriced homes. One sells. Now that's a comp. Now all the rest of my listings can sell at that one, hypothetically. Huh.
If
was that
if
actually
the market
happening?
Sustains it.
Right.
If the market sustains it, that's the key part. Like, not only does it have to happen, but there has to be a willing buyer to buy at that other price.
Which is a comment I made on my most recent reel on Instagram is, the guy made a great point that buyers set they are the market, but the price still has to be enticing for that buyer. It still has to be able to sustain it, right?
Yeah. All right. Last article of the day. It's breaking.
Play the sad music. They ask you if you're okay, and you're like, I'm just really not okay. And you try to get.
Is that the same one?
I think so. Isn't it?
They ask you how you are. You just have to say that.
Oh, it's a little different.
When you're not really fine, but you just can't get into it because they would never.
It's a little different.
I'd never understand. Mortgage applications plummet 14% as higher interest rates and Hurricane Ian crushed demand. So we do have a natural disaster end with this. By the way, reaching out to those who are in Florida who ever need help. There have been several groups on that, and I'll post a link to that. There's some groups. So I've got a lot of real estate friends kind of in those areas that are kind of leading the charge. And so it's neat to see them take it. One of them posted something the other day as a way to give directly to the people that are affected. I'll try to find that and post it on our show notes.
That's awesome.
But the highest mortgage rates in more than 20 years, with one of the deadliest hurricanes in record, both contributing to a steep drop in mortgage demand. Total mortgage applications fell 14.2% last week compared to the previous week. Average contract interest rate, 6.75%. Current rate has more than doubled over the past year, increased 130 basis points in the last 7 weeks alone, said Joel Kahn. He's a Mortgage Bankers Association economist. Mortgage applications to purchase dropped 13%. So that was the biggest drop. And of course, you do have 2 states that were impacted by the hurricane that, people probably did not apply for a loan last week. There's also impact from Hurricane Ian's arrival in Florida last week, which prompted widespread closings and evacuations. Applications in Florida fell 31% alone, compared to 14% overall. So I think it's to be expected. I would say give it a week, see what happens next week. I would actually give it 3 weeks, right? Because next week you're going to see an artificial increase because people that maybe were worried about being affected by the hurricane, but were not affected by the hurricane, go back and say, okay, we actually do want to buy that house now that the storm is over. And it may still be down in some of the areas that were hardest hit. So I would say give it a couple of weeks, kind of level out and really see where we're at. But very interesting timing for all this to happen.
Yep.
All right. Let's see. We have a couple of comments. Pinky Sue had posted something regarding donations in Florida. If this is what you meant. Yes, I did.
Wasn't she a character in Grease?
What was she?
Pinky Sue. I don't know. It's an interesting name. I'm going to have to meet this Pinky Sue.
I'll see if I can find it. All right. Well, thanks everybody for joining the show today. We appreciate you guys. The reason why we do this show live is because we love your feedback. We love you joining us live. And Dan, would you tell everybody before we leave where they can find you?
But yeah, Melissa wants to give a shout out right there. Shout out to Kinsey for all she's doing in Fort Myers, Florida right now. But yeah, I mentioned it last week, but right now, make sure you're checking on people, make sure they're okay, mentally, physically, all of that. Reach out, check on someone, do something nice for someone.
Yeah.
Small gesture right now can do a lot. If you want to follow me on Instagram, it's really the only place I post. DLudwigRocks, DLUDWIGROCKS. Where can they find you?
You can find me at Ray Zorback. That's RAYZORBACK. Wherever good Razorbacks are sold, especially on Instagram. So follow me on Instagram. Send me a message. Let me know that you're there. Let me know that you watch the show. I really appreciate that. got several words of encouragement last week. So that means that they stayed until the end of the show and they're like, I need to go tell Ray that I watched this show. So thank you guys for doing that. And we will see y'all next week. Bye, everybody.